Eric Mother, mother.com. Let's take a look at Coach, and here we are looking at a 2-year weekly. What we can see here is based on the recent 2016 weekly closing high at 40.52, which is this close here. You can see that over the last 2 weeks the stock has made an attempt to close above that weekly closing high, but it has failed. So what the stock needs to do is break out above 40.52 to stage a breakout. Now you can see the last 2 weeks this has failed, as you can see there, and part of this can be because the market itself, if we take a look at the S&P 500, the market itself is pulling back over the last 2 weeks, which puts pressure in stocks. Keep in mind that 75% of a stock's move generally tends to be in the direction of the moving averages, like the S&P 500. So here we can see that over the last 2 weeks, with the SPX drifting lower, also coincides with Coach failing to break out above 40.52. So this breakout here has failed for now. So that's one line or one level you can watch, the 40.52 level. And the other one you can also watch is this previous 2-year weekly closing high here at 41.50. So either of these can be used as trigger points to the upside. If one sets an alert, any movement in price above those 2 weekly closing highs might suggest that finally the stock is moving higher, and could also suggest that the market is also on a recovery mode. So I would wait for the breakout before really deciding whether to take up any position or fresh position here, because we can see right now the stock is running into challenges. Every time it tries to break out over the last couple of weeks above 41.50, it stalls. Now keep in mind that price of 41.50 goes back to this monthly closing high for 2015. So again, 41.50 is a number we can watch because it is the closing high on a monthly basis going back to 2015 high. So the market does need to move above that if it is to see this stock move higher. Keep in mind that right now we are looking at the technicals looking great, because right now the monthly RSI is at 3-year highs, and at least we have one of the MACDs, if not both of the MACDs, at 3-year highs or close to 3-year highs. So does meet the minimum requirement. All one would need here is for the market to trend higher and for the stock to finally clear the monthly closing high for 2015, which happens to be at 41.50. Otherwise, right now we can see here failure to break out, failure to break out. So one can ignore this until you see a breakout. Keep in mind, failed breakouts sometimes can be the cause of stocks pulling back. In other words, failed breakouts sometimes are the reason why stocks eventually start pulling back. Eric Mother, mother.com. So watch that 41.50 if you're truly waiting for a breakout and potentially a momentum igniting breakout. Peace and blessings. ESC.